I'd like to go over the financial statements with you. After you've had an opportunity to review those, feel free to call if there are any further questions that you have. I'd like to start with page 10 of the statement. It's the statement of net position. It gives a depiction of the assets as of September 30th, 2021. Cash and cash equivalents was $4.8 million. For the prior year, that was $3.5 million. You had investments of $1,494,000. Total assets, $28 million. The liabilities, you had those detailed out there, accounts payable, and then your capital related liabilities, 3.7 of a total of 6.1 million. The net position is the last line on that page. That's a very important measurement of any entity, especially a governmental entity. Your net position was $23 million, which is essentially your assets less your related liabilities. It's a very healthy measurement of where you are. Page 11, statement of activities. That's referred to in private businesses essentially as your income statement. On the left-hand side of the audit report, you have your expenses identified, the $7.4 million. In that total, you see the health care. That is per the agreement of the ordinance that the city collects and remits directly to the HCA. That's not an expenditure that you make, that's what you collect and then remit for the benefit of the HCA. Your revenues, if you look on the right-hand side of the page, sales and property tax, last year, that was 6.1 million. This year it's 6.4. It's up some $300,000, which is very good. Total general revenue, 6.7 million. The change in net position, that's, again, to put it in terms that we identify in a private enterprise, that's your net income. That's a very healthy $1.8 million, $1,863,000. Your revenues exceeded your expenditures by $1,863,000. The next page, we isolate the governmental funds. The general fund, which is the general operational fund for the city, 4.6 million in total assets. Last year that was 3.8 million. The other governmental funds, cash, and then your accrued interest receivable, 2.3 million. Last year that was 952,000. Cash and cash equivalents of your governmental entity funds was 4.8 million. The next page that I'd like to call your attention to is page 14. That's your statement of revenues, expenditures, and changes in fund balance for the governmental funds. Total revenues, 6.3 million. Last year that was 6,037,000. Other governmental funds, 2.9 million. Last year that was 2.3 million. Your revenues over your expenditures, this year 1.4 million. Last year that was 1,274,000. Again, an increase and an improvement. If you want to flip over to the notes section of your financial statements, the note 2 on page 23 reflects a prior period adjustment which goes back essentially. The healthcare authority is no longer a blended component unit of the city. We determined in discussing that with the attorney that what our requirement, the financial benefit burden relationship that was there previously is no longer in existence. It's essentially a separate entity. which is good for the presentation of the financial statements. And there's the responsibility that the city has is to collect the revenue and then remit it directly to the HCA. Okay. The capital assets section on page 25. Your increase, construction in progress, you had some buildings and some construction ongoing in progress, $369,000. Then you had some other improvements, some mobile equipment, $644,000. Essentially, not a tremendous amount of physical plant and additions. Page 26 is a very important section of the audit report. Your balance at 10/1/20 was $6.7 million. Due to the healthcare loan and the healthcare line of authority being separated from this report, there was $2,076,000 that was essentially transferred from the financial statements of the city onto the HCA. You reduced your debt in complete compliance with your debt covenants, $405,000. You were in compliance on all of those. The balance at 9/30/21 was $4.2 million. We give you in detail each note, the principal and interest that's due in the next 5 years, and then 5-year increments thereafter. The pension plan is rather lengthy. The footnote regarding it, I'm not going to go into that other than to point out, as I have in each prior audit, that liability, the pension liability, which is maintained by RSA, and we use their numbers that they compute for us, depends on investment return. If we have low investment returns, that liability grows. If we have better than anticipated investment returns within the retirement system, that liability goes down. But that amount is fully detailed out in those notes. Overall, we have no issues that we had in any of the departments that we looked at, any of our audits process. It was a very clean audit, very smooth audit. And we want you to know that we appreciate the opportunity to serve as your auditors and take that responsibility very seriously. And if any of you have any questions anytime in the future or during the year, we're a phone call away.